What rate would make you refinance? Not what rate would be nice. What rate would actually make you pick up the phone? Most people give me a rule they've heard somewhere like, we're going to wait for a full point. That answer is going to cost some of you real money because it isn't your number. Your number is one division problem. It takes about 90 seconds, and once you have it, you never have to guess again. For the borrower, I'm going to build in this video, it comes out between 6.5% and 6.82. And here's the part I did not expect when I ran it. The market is already inside this band. I'm a licensed mortgage loan officer, and coming up, the one division that gives you your number, the two things on every refinance quote that do not belong in it, and the trap that turns a good rate into more interest, not less. Here's the whole method. A refinance costs you money at the table and saves you money every month. So you take what it costs, divide it by what you save each month, and that tells you how many months it takes to get your money back. Cost divided by monthly savings equals months. And your number is the highest rate where that recoup still lands inside, how fast you want the money back. There is no rule because that division has two inputs, and a rule only has room for one. Meet the borrower. They bought a couple of years ago and borrowed $400,000 on a 30-year fix at 7.25%. Their principal and interest payment is $2,728.71. They're 2 years in, so they owe about $391,967 with 336 payments left. Now, what does it cost them to refinance? Some of this is flat dollars: underwriting, appraisal, the credit report, the recording fees. Call that $2,500, and it barely moves whether you're borrowing $200,000 or $700,000. The rest scales with the loan, title insurance, the settlement fee, and in a state like mine, which is Florida, we have doc stamps. Call that 0.9% on this balance, which is $3,528. So we have a total of $6,028. Now, here's where the whole thing gets sabotaged because that is not the number you're going to see on a quote. You'll see a bigger one because two more things are sitting on that page. The first is escrow funding. They collect several months of taxes and insurance to start your new escrow account. The second is prepaid interest, which is the interest from your closing date to the end of the month. Your old escrow account gets refunded to you, usually within about 30 days. It's your money, it went sideways, and it came back. Leave those two in, and this refinance stops looking like $6,028 and starts looking like $8,691. Same day, same loan, 44% worse on paper. So when you compare, use the cost of the money, lender fees, titles, and taxes. Escrow and prepaid interest are a timing thing. They're not a cost. You have them no matter what loan you have. Cost is locked in at $6,028. Now the other input, which is just a payment table, at 6.625%, which is $218.90, 27 and a half months. At 6.5, $251, 21 at 24 months. At 6.25, $315.30 at 19 months. The rate walks down in a little quarter point steps and the recoup falls off a cliff. So which one is your number? If you want it back in 2 years, you need to save $251 a month, and your number is 6.5%. If you're comfortable getting it back in 3 years, you need $167 a month, and your number moves up to 6.82%. So your number isn't a point, it's a band, and it's the borrower's band runs from 6.5 to 6.82. Your recoup has to be comfortably shorter than your stay. Two things. Then I'll get right back to this video. If this is helping, please tap the like button and subscribe. Much appreciated if you do. And the second thing, I'm a licensed mortgage loan officer. This is what I do all day. If you want to go through your exact situation, I have a QR code on the screen and my email address is on the screen, and both are in the description and the pinned comment, which is the top comment. Book a free call with me or just email me. Want to run your numbers first? You can do that. It's free on my website. I have a recoup calculator for refinances, and it's linked in the description as well. All right, so let's get back at it. Now, let's be fair to that rule. On this loan, a full point means waiting for 6.25%. And at 6.25%, you recoup in 19 months. So it tells you to ignore every rate in between, and that's a band more than half of a point wide. And notice where the market is as I'm recording this. It's around 6.625. That is inside the band, and the rule told you to ignore it. $218.90 a month, recouping in 27 months, and the only thing standing between this borrower and that money is a rule of thumb from somebody who was not looking at their loan. And there's a second thing that rule can't see: the size of your loan. Remember, part of the cost was flat dollars. That flat piece doesn't care how much money you borrowed, but your monthly savings absolutely does. So watch what the exact same drop does to the three different people. A $200,000 loan, they save $125.60 a month, and it takes them 34 months to get their money back. $400,000, $251.21, and it takes 24 months. $700,000, $439.61, and they're done in under 20 months. Same drop, same day. Same everything except the balance. A small loan needs a bigger drop to be worth it. A big loan is worth moving on a smaller one. One rule of thumb was never going to answer a question with two inputs in it. Now the part that actually costs people money, and it is not the rate. When you refinance, you start a brand new 30-year loan. Door one, they do nothing, 336 more payments, 7.25% is $524,878 interest from here. Door two, they refinance 6.25% and they take a lower payment, $476,860. Now, door three, same refinance, same $6,028 of cost, same 6.25%. And they just keep writing the check they were already writing, $27,2871, exactly what they paid the last month. Interest from here, $332,358 against the door two, which is $144,502 for free. It cost them nothing. They didn't send an extra dollar. They just didn't take the raise. And here's the ugly version because it's the honest one. Go to the top of your band, 6.82, and refinance into a fresh 30-year. The recoup math says, yes, 36 month, $167.44 a month back in your pocket, but your lifetime interest goes up $5,212. Both are true at the same time. Your monthly is better and your total is worse because you just bolted 2 more years onto a loan you were already 2 years into. And this is where that full point rule actually comes from. Nobody built it as a break-even test. It's a safety margin. Make the drop big enough and the reset can't hurt you. Except you're paying for that margin by waiting, and door three gives you the same protection for free. Take the rate, keep the payment. So let's talk about timing, because this is where people get it wrong in the other direction. They've got their number now and they've figured they'll keep an eye on it. Here's why that doesn't work. Lenders reprice during the day, not once a week, during the day. And a rate lock runs 30 to 45 days, so the thing you're trying to catch is measured in days. The paperwork is measured in weeks. And rates don't drop for one person when they move. Everybody files at once. Underwriting queues are backed up. Turn times get longer. At the exact moment, you need them to be the shortest. So the person who gets that rate isn't the one who was the smartest about it. It was the one who was already ready. And ready is small. 1, know your number before you need it. 2, put your documents in a folder. 2 pay stubs, 2 tax returns, 2 bank statements, and your mortgage insurance declaration page and your mortgage statement. That costs you nothing and it doesn't touch your credit. 3, have your number watched instead of watching it yourself, because you are not going to check a rate table every morning for 8 months. So here's what I do instead. Tell me your rate you're waiting for, the one you just worked out, and I'll watch it for you. The day I can actually quote it, you get 1 email. That's it. Not a newsletter, not a drip campaign. 1 email. Once, and then the watch closes. Links in the description, takes about a minute, and it doesn't touch your credit. 3 honest things before we wrap up. Your number might start with a 5, and that's fine. If you're already at 6.625, the same division puts you in the 5.63 to 5.97 band. And if you have a FHA, VA, or USDA loan, your number is different. Probably better because streamlined versions skip the expensive part. FHA has a streamline, VA has an IRRRL, and the funding fee is 0.5%. USDA has the streamline assist, and the regulation on that one is remarkable. No debt to income ratio calculation, no credit report, no property inspection, no loan to value requirement. Lower cost means a smaller drop clears your recoup, so your number is higher than actually conventional borrowers. And everything here is a rate term refinance. Pulling cash out is a different transaction with different pricing. So here's the whole thing on one screen. Take what the refinance actually cost, leave out escrow and prepaid interest because those come back to you, and divided by what you'd save every month. Your number is the highest rate where the recoup lands inside 2 to 3 years. For the borrower we built, that's 6.5 to 6.82, and the market is already in it. And whatever rate you get, take the rate and keep your old payment. That one decision was worth $144,000 and it cost nothing. One last thing. If you want me to run your number with you, there's a QR code and my email is on the screen. And if you already know your number, set it on the page linked below and I'll watch it for you. Book a call, email, or just your number. I'll see you in the next one.